Now I'd like to show you the use of another template. We call it Simple. If I right click on the chart and you see the templates, you get this with your program. So I've been using that for a long time. I'll just leave this here. But what I wanted to show you is how to use it. Alright? It's pretty interesting. Now one thing you notice is I move the charts back and forth. This happens with the ergodic because it is a triple derivative. It changes places with respect to the price. But let's just take a look at this one little area right here. Now you know my normal signals are I get an arrow, then I get a color change, then I get a cross to get in or do something else. What you'll find by using the simple technique is there are really only two signals. You'll get the signal change and you'll get the color change. So if we look right here, we got the end of the trend down. The ergodic continues down. Then it changes color right here, and you can get in on that color change at the beginning of the next bar. Now this is 82.75 and it goes to 83.75. Remember, you can never predict how far the market is going to move, but it will move with these indicators. And thirdly, secondly, whatever, is you get out when you get a Pesavento bar. So I'll just back up and take a look at a couple of other places. Here's a really good example. Here was a double top. Now I'm using the 333. Here was a double top. We got the arrow. We got the color change, and you get down, but you don't get another Pesavento bar. Now, if you got in here at 1084, the market goes down a little bit to 1083.50, comes back to 84.50. You do not get stopped out, but now you get a second color change going down, and then by the time you get this other Pesavento bar, this is a reversal, a double top, you're down to 1082.25. You got about 2 3/4 points. There are a lot of these things. Now these show continuation divergences. In other words, you got a lower low on the indicator and an equal high on the price tells you the price is going to continue down. Now here we bounced and came back up. You get a Pesavento bar here. Now you've got a triple top with a much lower indicator price. Says you ought to jump on that baby and get in short. So if you get in short in this red bar right after the bar is changed, you have to wait for the bars to complete. Down you go at somewhere around 1083.75, getting out at the Pesavento bar of 82.50, another 1.25. So this is not a very active day today. I think I took some trades over here in right around 2 o'clock, which is the times we talk about trading, 2 to 3 o'clock in the afternoon. Continuation divergence, down you go. You get out. You now get a lower high and a lower high on the indicator. You can get back in here at 1081.50 and down you go to 1080.50. We're picking up 1 point at a time. Now if the market's not moving very far, that's all you're going to get. So you have to be prepared to get out. So I hope this helps. You just use a simple template. The long-term ergodic is not in here. And the way the ergodics work on all the charts is the only other way you can get around to it is when you are at the actual point of when the market is changing, and we're in the aftermarket right now. I finally had to switch to my laptop to start doing these trades or doing these little Jing videos, but here you get a divergence with the price and it goes down but not very much. So you've got to be aware that these things don't go very much, but with no Pesavento bar you go back up, you're not stopped out, and you come back down here to the Pesavento bar and you pick up points. So I hope this helps. I'll post this in the trading room.